What's up, everybody? Welcome to the Games Growth Podcast. No sassy cold open today. Just want to share a few thoughts from myself and the team. So today we are going to wade into the dangerous areas of Upptic doing a political tangential podcast. But I just want to make clear, we're going to be doing a lot of analysis of what the Trump presidency is going to mean for the sector. We know you don't come here for political opinion. And I also want to make clear that, we're going to say some things that are good, some things that are bad for the sector. None of this is an endorsement of any political views. We know a lot of people are happy about the events in the US of the last week. We also know a lot of people are very hurting and upset about what has just happened. And within our team, we have a big diversity of opinions and backgrounds and people across the spectrum. We're sure in many of your families and teams as well. As a big disclaimer, what we do hope to give you this week is our take on how this is going to impact all of us working in games growth. And with that, hope you enjoyed the episode.
So first and foremost, we're going to try and outline in the most sober terms possible what we understand Trump's policies to be and what realistic expectation for the policies he intends to implement during his presidency. So we'll start with a little section about that, sort of what's the macro overview, what are some of his policies, what are the likely financial outcomes, those types of things. And then we're going to break it down and deep dive into three subsections. We're going to talk about this in context of legacy gaming. That means, from our context, mobile and PC console. Emerging gaming, this is more like Web3 crypto, plus we'll talk about AI and emerging technology. And then last but not least, we'll talk about it from the context of growth marketing. The big component of this is ad tech. We'll talk about some of the big tech giants like Google, Meta, Apple, Microsoft. Some of the more niche ones, like we talk about Apple Event, Unity, and we'll go from there.
Yeah, and as always, the podcast was brought to you by our team here at Upptic. At Upptic, we do games growth stuff. We make really awesome software that's very affordable and does a lot of powerful stuff so your team can do growth marketing more effectively and automate more of your dashboarding, data modeling, creative workflows, and lots of other cool stuff. And if you need an army to scale your game best in class, we have that army for you. So we do creative at scale, we do growth marketing, user acquisition at scale, we do social media and Web3 marketing, essentially everything you need to take a good game to mass audiences effectively and profitably. So if any of that stuff is helpful, reach us on our website. It's upptic.com, upptic.com. And with that, let's get into the heart of it.
Let's go. Let's see how much of our audience we alienate, Warren. It's going to be great. All right, starting out, we're going to talk about the macro pictures. As I assume everyone who hasn't been living under a rock knows, Donald Trump won the U.S. presidential election. He'll take office January 20th, 2025, assuming that nothing crazy happens between now and then. Trump is broadly assumed to be a pro-business candidate, which is reflected in the stock market sentiment. Since this week, the S&P 500 is up 5%. And if you look at tech stocks that are in my portfolio, particularly, they're even more. Also, as we'll talk about, crypto is way up. So that's another interesting component. Briefly to touch on the expected Trump's policies and regulatory stance. From an M&A perspective, Trump's administration is expected to implement policies that streamline the regulatory process, reduce regulatory intervention, fostering an environment that is conducive for M&A. So basically, we expect M&A to expand pretty meaningfully under Trump, given his pro-business stance. Antitrust is an interesting one, and we'll talk about this in a little bit. Trump has, in the past, expressed concerns about the market power of major technology firms. But he's also, being a pro-business guy, been very reluctant to break them up. That being said, his administration did initiate a number of the antitrust cases that are currently still working their way through the courts against big tech. And the expectation of the administration is going to continue those. Interestingly, J.D. Vance has been a very vocal advocate of aggressive antitrust enforcement, J.D. Vance being his VP. He's actually one of the only Republicans who's given Lena Khan props, calling her one of the few people in the Biden administration I think is doing a pretty good job. So it's kind of unclear what the administration is going to do here. Warren, do you have any thoughts?
No, it's going to be interesting because we see, there's a lot of thought pieces on how Lena Khan is expected to be fired too. And I think one thing that is very different, for better or worse, about this Trump presidency versus the prior one is who his donors were and who his backers were. And he has a ton of support from big tech in this administration forthcoming and in this election cycle. And we do know that Trump is a pretty transactional guy at the end of the day. He likes people who like him and who support his campaign and support him. So I would say that past performance is not indicative of future performance as far as what policies were in Trump administration 1 versus Trump administration 2. And I expect it to be immensely more tech friendly this time, even if that might be in a weirdly specific and biased way to, those pockets of tech that were more aligned with him. And we'll get more into this, but I think one of the obvious ones is crypto. Crypto was a huge lobbying force in this election cycle, and he's made his intentions as far as how he plans to support crypto businesses very clear. And that's one segment I know we'll dig into, but should be quite different from the first administration.
Yeah, agreed. And also just the relevance of crypto is an overall economic force is really drastically increased since his first term. Okay, so rounding out the regulatory and policy section, I want to talk briefly about tariffs and sort of just the protectionist stance. So Donald Trump has put significant increases in tariffs as part of his economic strategy. He's advocated a baseline 10% tariff on all imports, which is pretty crazy in terms of the historical context to how we've treated free trade since World War II. He's also talked about how he plans to use tariffs as a tool and as a weapon against specific countries and products. Notably, he suggested up to a 60% tariff on all Chinese goods and up to 100% tariff on cars manufactured outside the United States, completely uncorrelated to his largest campaign donor. So I think it's pretty fair to say that we will very, very likely see some increase in tariffs. Notably, this is not something that has traditionally affected digital goods, so we can talk a little bit about that later on. But I think broadly, we should think about Trump as a protectionist, if not an isolationist, which is to say he plans to use the government as a tool to protect American business in a way that many of the free trade policies of the last several decades have not necessarily done.
Yeah,
okay,
just one macro thought there. Like, I think the area that we could see tariffs potentially impact a lot that I've seen a little writing about is gaming hardware. So a lot of that does come from China or through China. So that could be, we usually don't go too deep in the hardware segment as it doesn't affect the day-to-day of marketing as much, but that's one area that I do expect to be impacted if these policies go through.
Briefly want to talk about financing at a macro level. Then we'll dive into what you're here for, which is how these policies specifically affect the games growth segment overall. As we know, the Federal Reserve acts independently from the president, at least in theory. Although if you looked at how they interfaced with Trump during the first presidency, he clearly was able to bully them to reduce rates for a long time. So we'll see. A couple interesting things. Currently, the Fed is projected to be on a cutting cycle. Right now, they're projecting for the Fed's fund rate to be 4.4 at the end of this year and to decrease potentially under 3% by the end of 2027. That being said, these are projections and they're always very subject to change, as you've seen if you've been following the Federal Reserve behavior at all over the last year. That being said, post-election, the 10-year Treasury yield increase, which reflects investor concern that high inflation and large budget deficits could affect the Fed's capacity to cut rates. And so basically what this is saying is the market that is looking at Treasury yields are saying, we're not actually sure if the U.S. economy is capable of cutting rates at the capacity that the Fed says that they intend to. So what that means is right now the expectation is might get cheaper, but we'll have to see. That's sort of the Federal Reserve perspective. On the crypto side, this is where I'm sure Warren's going to have some opinions. Crypto is likely to have very lenient regulatory structure under the Trump administration. He pledged to transform the United States into, quote, the crypto capital of the planet, and emphasized the importance of fostering innovation and leadership in the digital currency space. That's very new, right? Both from him as well as it's a very divergence from any other previous government. He proposed a development of a strategic national Bitcoin reserve, utilizing seized cryptocurrencies to build a strategic stockpile, which is kind of hilarious. And that's my own opinion. It's an initiative which aims to theoretically integrate Bitcoin into basically our national strategic asset framework, which we'll see if that happens. I think and this last piece is definitely going to occur in my perspective, and I think it's very, very important. He has committed to appointing a crypto-friendly regulators, especially a new chair of the SEC, which he sees, the current chair, Gary Gensler, as being anti-crypto. And so I think basically zooming all the way out, we expect it to be a very crypto-friendly presidency. Warren, any thoughts before we sort of talk about this in more depth?
Yeah, I know we'll get into this more in the segment, but I think that's one thing that he's been very vocal about is SEC Chair Gensler is probably going to be out pretty quickly once Trump settles in. He's been seen as like the main blocker for getting a lot of regulative clarity and policy established, both for the sake of crypto and Web3 based businesses, but also I think there is a mutual interest in also just getting this segment better regulated, more clear laws, more clearly taxed, so we're not just driving this business out of the US. Regardless of your views on crypto and Web3 as a segment, it's undeniable there's a lot of money and revenue in it, and having ways to keep that within the US in a regulated and taxed way, I think is in our country's best interest.
Yeah, agreed. And we'll talk about that as you talk about emerging games. Okay, so that's enough about the macro framework, how we expect the Trump administration to behave. Let's talk about how this now will affect the different game segments that we focus about here at Upptic.
So up first, we want to dig into the category of what we'll call legacy gaming. This is kind of like our established platforms of PC, console, and mobile gaming. So let's dig into how we expect the new administration and this Trump 2.0 era to affect traditional or legacy gaming. Xander, where do you want to start?
Yeah, so I think at the highest level, decreased borrowing costs, which are occurring, which will continue to occur as long as we're able to, and a lighter regulatory environment means that we're going to see increased M&A. And that's going to be true, especially for the legacy businesses, mobile, PC, console. who are growing tepidly relative to, where they have been historically. I mean, we've talked about this in the past. That's almost definitely going to occur. And this is happening in part, not only is it just sort of these game companies have been around for a while, and you tend to see consolidation as the segments continue to evolve, but you're also seeing that the major distribution platforms, Apple, Google, Steam, as well as the 8 major ad networks, Meta, TikTok, Apple Event, etc., they continue to just consolidate the value of the distribution chain. So what do I mean by that is like Apple, Google, these guys take 30% of the top of every game. We know that. And then on the flip side, as we do distribution, the cost to do distribution continues to increase. And so the only way that these companies are able to survive if they're going to be able to build up. And so all that is to say is these are massive. We're going to continue to see consolidation on the legacy game space. And I think that's the only opportunity these game companies have in order to be competitive in the really, really rigorous environment that we're going to be in.
Definitely don't think that's the only narrative here. What I do think we're going to see happening is, in the same way that funding for new studios and just sustainability for medium-sized studios was really rough the last few years, and we saw a lot of pain, a lot of consolidation, a lot of companies going under. I do think, and this is not fully because of Trump, but just a factor of rates starting to go back down, it is expected that that might be accelerated, like a bit of a forcing function or push against the Fed to accelerate the declining of interest rates. Either way, it's going down, and it may go down at a faster than previously expected rate. So I do think there's going to be a renewed interest in just growth and small businesses in general from an investment standpoint, and from a games industry standpoint. This will be our first convergence of low interest rate, more readily available funding, plus the streamlining and more efficient development of games that's been fostered by the advents of AI that have happened during this like compression cycle that we just referenced. So I think that's going to be very interesting. And we might see, Xander, to riff on one of your theses that you come back to a lot, I think we will see an acceleration of some sort of like the micro studio, like new teams that have funding available that are going to market quickly in a very lean way with more efficiencies to game development brought by the AI advance over the last few years. So that's a specific trend that I expect to see unlock in this next couple of years as far as who is making games, like who are the breakthrough like new players for game development.
Right. And I agree on. I have more thoughts about that. We'll talk about sort of in the emerging game segment, but I think that's absolutely correct. One other interesting trend to keep track of here is the fact that the VC industry very, very publicly threw their backing behind Trump relatively early in this election cycle. They actually made this distinction between small tech and big tech. But people like Andreessen Horowitz very, very publicly came out and were some of the first tech major power players to say, hey, we're very interested in this. And all that is to say is we're going to be in a VC-friendly environment for at least a 4-year period, which I think is just more proof on the thesis that you're articulating, which is that people will be investing because we have a VC-friendly environment, rates are lower, and importantly, we expect there to be M&A at the top end. So which is what facilitates a VC cycle. And so I think you're totally right. And I think it's like a brush fire, right? We'll see the consolidation, and then we'll see a lot of rebirth. And that's something we've talked about here a fair amount.
Yeah, so I think that's the big macro trends we expect in the traditional or legacy gaming space.
The next component is emerging gaming. There's basically 2 big themes here. Crypto, Web3. This is a big one, Warren. This is a place that we put a big flag in the last couple of years. I think we have seen a lot of success there. It's been a struggle in a lot of ways. He's clearly the pro-crypto guy. Trump is clearly the pro-crypto guy. What do you think is going to happen here?
Yeah, so the thing that I think about a lot, during this last few years when we had this kind of painful period for gaming, it's sort of like we saw a survival of only the best or most innovative subsets within these sectors. Did a lot of coverage a couple weeks ago about Off the Grid, and that being one of the first games with Web3 DNA that's broken through. But really broken through, I'd say, in spite of the Web3 elements, not necessarily because, but even that is notable. But even for breakthrough titles that are like, number one on Epic, like Off the Grid had been for a period of time, they still are operating in the shadows as far as how the Web3 elements of their economies operate. We talked about this on the episode. But because of the lack of clear policy around some of these emerging technologies of how Web3 is used in gaming, game developers have to be very careful about any sort of public documentation of how ownable assets work in their ecosystems. If there's a token-based economy, that has a ton of risk and lack of clarity. So that's the thing that I think is going to be the main positive for gaming in Web3 is just clear guidelines on what is and isn't legal and how that will be taxed, like if there's any age gating that has to be happening because of that. But I think it's going to just clearly define the guardrails so larger, more professional teams can build with Web3 if they so choose with more confidence and clarity.
Yeah, I agree. I think that's totally right. And I think that the new regulations, that I expect there to be some incremental regulations under the Trump administration, I expect them to be fairly beneficial to crypto in general. And what I think it's going to continue and increasingly unlock the capacity to use tokens to generate revenue for early stage game companies, even late stage game companies. The question I have here, and I'd actually maybe like your thoughts here, is like what the market is going to tolerate, right? Because at the end of the day, the thing that we're seeing is a lot of people have issued tokens. A lot of those games have raised a lot of money, and not a lot of games, those games have delivered a really killer product or driven a sustainable return on the token. And so that's the big question here, is like there would definitely be the capacity to continue to do this. And the question is, what will the market tolerate in terms of how we use these tokens going forward? Any additional thoughts there?
Yeah, I mean, good games are still going to be good games. Bad games are still going to be bad games. And as much as I am pro Web3, we have a horrible hit rate for actually shipping quality products. And like, I think the space needs to own that. That's tied to sort of like a very immature investment model where it's more about token liquidity. I think this is kind of independent of some of the policy things that we're talking new to the era. I think independent of the new administration, we are seeing more maturation in the segment. We are seeing more funding of Web3 enabled studios, just like game studios, rather than funding them like they are a shitcoin, which is like essentially the current funding model. So I think that part of the ecosystem is kind of trial by fire, evolving on its own in spite of the Trump win. But that paired with clear regulatory guidance, I think we're going to see just a more mature version of what we saw the last cycle of Web3 gaming.
Yeah. And if we see maturation in Web3 gaming, I think it's actually it's like what gaming are basically the first use cases of every technology. Go back and look. It's like always the case. And so I think that if you expect that to be the case and you expect this to mature, that's actually a pretty bullish sign that Web3 technology proliferates outside of gaming as well. And so that's the other thing to just kind of keep in mind here and keep an eye on is like as the use case is proven out from the game use case, 5-10 years later, it'll be everywhere else. And so that's just something to keep an eye on. Okay, the other obvious emerging technology, and maybe we should have started with this, is AI. That's the huge thing that everyone's talking about. We actually alluded to this in the last section a little bit, but AI is the big thing that's going to upending the way that we all think about work, the world, what knowledge is, what humans are. So I want to talk a little bit about that. So Trump has said that he's going to rescind the 2023 executive order that Biden did on AI, which a while I don't think was more of like a guidelines to think about guidelines. So it wasn't a hugely important executive order. But what I do sort of anticipate is that this is going to lead to more of a free-for-all as it relates to AI in the U.S. business environment, which will then proliferate to the global business environment. And I think that there are potentially various outcomes, right? So like what makes me very, very excited for AI, we use it a lot here at Upptic, is that it allows small, smart teams to become competitive with traditional gigantic gaming behemoths, which with a drastically reduced cost structure and increased efficiency relative to their existing slow-moving competitors. And this is awesome because it means that you can create a business structure for games which does not currently exist and allows you to get major distribution with a low cost basis. The danger from sort of rampant, unregulated AI is that the question of where the value of the AI consolidates in the value chain. So if it accrues to the tech giants, which is a very, very possible outcome, people like Meta, people like Google, then you're going to see in a situation like we have today, where you have a handful of gatekeepers who are consolidating and sucking a lot of the value out of the ecosystem, right? And so that is like the argument for why you would have AI regulation, is that without it, you just have these behemoths who just keep getting stronger and stronger and bigger and bigger. If we are able to have either the market demands or regulation creates a world where you have sort of a diverse set of AI players, then it's possible that the small game companies are able to capture much of the value. But I mean, that is a pretty optimistic perspective on this. I have more thoughts, but Warren, do you have any thoughts here?
Yeah, Xander, I think you're missing the most obvious one here. Where did Trump's largest donor come from for this election?
It was Elon, right?
Yeah, right. And, regardless of what folks think about Elon, he has a lot of very strong beliefs in AI and ethics around AI and how it has to be regulated. And I think, Trump left on his own devices might be more like a free markets approach when it comes to AI. I do think because of the direct sway that Musk will have in this administration, we might see more of like the cautious approach to some aspects of AI development and how freely it's allowed to advance. But I also expect that we're going to see certain parties being able to operate a little more nimbly or have a role in setting those guidelines. So I think we're going to kind of see preferential treatment of certain forces building in AI that were friendlier to the Trump campaign. And I wouldn't be surprised if some of the big players that were not super friendly, again, like I view him as a pretty transactional president and human being. And I think we're going to see that reflected in the policy. So that might sound like it's all bad. I do think that, like, for example, Sam Altman, I think seems to be a little more a voice for sort of like free and unregulated development of AI. Whereas, like, I don't want to get too much into this stuff here, but it's like, I do think we'll probably see some concerted efforts to have sort of like ethics and oversight in AI development. That's my optimistic take from a different standpoint. But in any scenario, I do think we'll see acceleration is inevitable of AI in this next few years. That would be regardless of who is president. And I think it's just going to be like, what flavor does this administration take on the nuance of regulation, ethics, who is calling the shots on this? That's what I'm really thinking about here. And then I think the last thing is sort of like for AI is just the kind of products that will be allowed to bring to market and how quickly those will be able to go through regulations. This is kind of a broad thing that, like, I don't even know what I don't know here, but I think we're just going to see new types of gaming experiences or game-related experiences that raise new ethical questions, create new business models that we haven't even thought of yet in the next few years.
Here's what I'll say, just sort of the punchline as it relates to the administration and what the direct impact of that is. And there's a lot of impacts that AI could take, and we could do 17,000 episodes on just that. We could actually have AI generate content of us just talking about what AI is going to do forever. Yeah. Maybe we should just do that instead of recording these. I think the main thing is I would actually be very, very surprised if we go into a strictly regulated environment for AI. I think Elon may have 180 on this. And if you look at, he's basically has the biggest supercomputer in the world now, right? XAI is now like one of the most ascendant AI companies in terms of valuation, money raised, how many NVIDIA and N200s or the H200s are. My guess is we're going to go into a free-for-all environment. And I do not know that, but that is my guess. And we'll see. Any other thoughts about the emerging game segment and how technology will affect that?
They have the one more obvious one. Xander, what's my pet emerging gaming platform that doesn't really exist yet?
Xbox Live?
No, it's autonomous vehicles. So I think that's going to be, sorry we keep bringing up like Elon Musk related things, but I think that's another really obvious one. It's going to be niche to start, but I feel like probably towards the end of this administration, it's very clear that the technology for autonomous vehicles is basically already here. The next blocker is the regulation and pushing through to actually get these on roads in mass. And again, it's just like who's lining the pockets of the candidate. I think that Trump will be forcing through anything that Tesla and other companies are going to be able to ride on the coattails here for getting autonomous vehicles on roads. I do think it's not going to be like overnight, like a massive new gaming sector or device. I think we're going to see a lot of similar experiences in the first era of like autonomous vehicle gaming. But the main thing is it's opening up more gaming time. It's more time, more revenue that people are going to be spending doing games. And I think that is something that people are really not thinking about, is really underestimated as far as like the future of the sector and how it might evolve.
Yeah, I agree. So two thoughts. One, there's 4.5 million Teslas on the road already. So that's not so far cry from the billion plus iPhones, but it's not nothing. Then number two, you clearly have not been spending much time in San Francisco recently because you go to SF and they're on the road. There are a number of Waymos that are freaking everywhere. It's literally like every third car now. It's crazy. It's like insane how much self-driving is real in the Bay Area. Lastly, but not leastly, we're going to talk about growth marketing, focus on ad tech, talk about how the Trump administration will affect this. Warren, let's go to you first. What do you think?
Okay, so what do we think this means for the growth marketing and advertising segment? A lot of my thoughts here have to do with more of the macro factors that we talked about. So again, with rates lowering, with investment in gaming and tech scaling back up, we are going back to a growth era. What drives growth? Well, one big thing that drives growth is marketing and advertising. So we expect that we're going to go into another big boom period for both the legacy large ad networks, Apple, Google, TikTok, that will probably only continue to consolidate power and acquire smaller entities, But I think there's also just going to be an open season. When we're in periods of growth, this is also in the same way that there are going to be a lot of new gaming startups. We'll probably see new innovations in ad tech as well. And I kind of welcome that, putting on my prediction hat here. But I think we've been in such a dry spell of like innovative new offerings within the world of advertising. And again, going back into, overlapping these themes of like emerging technologies and AI and a growth-focused economy that we expect. I am kind of predicting we'll see maybe a new era of ad offerings, but this is kind of tinfoil hat. So that's my high-level thoughts. I think the safe thing to predict is people are going to be spending more on ads again. What is harder to predict is like, what kind of new things are we going to see in this era, if any, or is it just going to be more of the same, the rich get richer? What do you think, Xander?
Door number two. Short answer, door number two. I mean, big tech remains the unstoppable force of the U.S. economically and increasingly politically. And if you watched leading up to the Trump election, many prominent Silicon Valley power brokers and executives have shifted their position to be, if not fully pro-Trump, at least Trump agnostic and Trump welcoming. And I think that we're going to see an era of unprecedented Silicon Valley influence in Washington and amongst the Trump administration specifically. In the most like dystopian way of thinking about this means that your capacity to operate in the digital environment is going to be in relationship to your ability and understanding of how to navigate a world that is dominated by these tech behemoths. I think that is the base case. I think that is basically the place we're going. And the reason for that is a couplefold. One, we just understand that as advertising gets more and more sophisticated, data becomes a differentiated advantage. The companies with the biggest data sets have the most advantage, and therefore they're going to continue to be able to run. Number two, as we understand it, AI, if we assume that AI is going to be on the forward-looking, one of the most important, if not the most important forward-looking technology, the companies with the biggest data sets, data centers, pocketbooks are going to be the ones who will be able to invest in the AI technology and be able to produce the best outcome. So I think that undeniably, you're going to see the biggest guys in the space, biggest guys and gals in the space just dominate everyone else. And I think that is sort of my base case. And it's great if you're an equity holder of these. It's not super good for everyone else. It's arguably pretty bad. This is a place where I think that like the JD Vance perspective that you actually want to break up these companies is a fairly good one. Now, again, I'm not particularly sure that's going to happen, but it's a good one. The one thing I'll say, the weird edge case here is like, we're going to see a tariff on an iPhone. Is that what's coming? We're going to see big tariffs on iPhones. They're all produced in China, right? 60% tariffs on iPhones. Come on, Tim, let's put some factories in Arizona. What are we doing here?
Yeah, I think that just depends if Tim Apple gets invited to another dinner at the White House for this administration.
Cool. I mean, any other thoughts here? I mean, I think I had a pretty clear and straightforward opinion here. I mean, like, we maybe we could talk about some of our friends like Antonio who are building blockchain-based ad networks. That's interesting, right? Because my whole thesis is like, if you control the data, you have all the power. If we have open source data, maybe we democratize the power. Is that something that you think is a feasible outcome here?
Yeah, I mean that overlaps on a couple of themes. I mean, I think we're going to see better funding for people that are doing new things. I think we're going to see better clarity in the regulation that could impact some of these. Yeah, it's going to be a period of a lot of change. I think just to put a bow on some of these things, it's going to be a period where probably businesses have a lot of power in both good and maybe scary ways for some consumers. And it's probably going to be a period where a lot of the trends and changes that we are expecting around AI, around interest rates and investment levels accelerating go even faster. So that's kind of the big macro things that I'm thinking about. It's an interesting time to be alive, Xander, and it's an interesting time to work in this sector.
Yeah.
So this was an interesting episode. I mean, at first thought, I think we were like, well, I mean, what does this administration change have to do with gaming and games growth marketing? But the more we chatted about it, I think there's quite a bit of change on the horizon. Any final thoughts on your end?
Yeah, no, I think you're right. I think that there's clearly the tack is different. I mean, we've been in an era of a lot of corporate power, and I don't see that changing. And I think, as a small business like Upptic or many of the game companies we serve, or even the medium-sized businesses which we serve, it's exciting because there's a lot of opportunity. It's just going to be a brutally capitalistic enterprise over the next several years. It's like we are going into peak capitalism if we have not already been in peak capitalism. So it's good if you're willing to play that game, but it's going to be a tough one. It's going to be very, very interesting times. On that note, you should buy our technology platform to help you do that.
Beautiful point, Xander. All right. So thanks everyone for joining us and suffering us through a more political leaning episode. We hope you found some value in it. So as always, the show is brought to you by our team here at Upptic. Usually we're not making podcasts. Usually we're helping scale games. We do this through our software and through our awesome growth services team that does user acquisition work, Web3 marketing work, creative, and all the other support functions that you need to scale a game profitably. So if you're making a cool game across any new or emerging technologies, we are your folks to help you scale that game. You can reach us through our website, upptic.com. That's upptic.com.
Talk soon.